Hey, Rick.
Hey, Megan.
You're sitting in front of the window. It's a little bit gloomy, so it must be summertime. It has not. I hope you're taking vitamin D supplements because there has been no sun and
There hasn't.
we've got to stay on top of these things, right?
Well, I think that will change soon enough, we hope, right? The June gloom will be over here next week or two.
We'll start complaining
Maybe
again about
sooner.
how hot it is.
Exactly. I don't know. Yeah, yeah, for sure.
I wanted to bring up a topic today that I think is pretty relevant to me right now, especially.
Yeah.
And probably we're going to see more and more of it. And that is properties that are in an HOA, specifically really condos, townhouses that are what we call non-warrantable. And we're not talking about homeowners insurance. What are we talking about, Rick?
Well, it's a great topic, and it's one that people don't really know about because it happens so much behind the scenes, and there's a lot of jargon within the industry about that. So let's talk about what that is and what it means. So let's dig a little bit deeper, though. When you have a condominium where there's an HOA, and there's always an HOA for condos. When you deliver loans, all lenders have to deliver loans to either Freddie Mac or Fannie Mae. And lenders have an obligation to verify all the financials and obligations of the HOA, the soundness of that HOA, to make it what's called, per Fannie Mae guidelines, it's called a warrantable condo. If the condo does not meet the guidelines of Freddie and Fannie, it becomes a non-warrantable condo. And so therefore, those loans are no longer eligible for sale to Freddie or Fannie. And so when you go outside of that Freddie and Fannie space, you go into the world of called non-QM, which stands for non-qualified mortgages. The non-QM is a different term for the old days of subprime, right? The higher cost, higher interest rate types of loans, because when you go outside of that space, when Freddie and Fannie are not going to buy that loan, you have to go to other sources that are more expensive than Freddie and Fannie. And so then you have the non-warrantable condo issue, right?
So hold on a second. 1 second. So Freddie and Fannie, so that people know, are backed by whom?
Well, that's the agency that actually buys home mortgages. So every lender in the country, no matter who they are, they have to price loans, what's called on the MBS, mortgage-backed securities. And that's really set up by Fannie Mae. So you have to, that's how loans get priced, and that's how loans get delivered. So Fannie Mae is then Freddie Mac. Freddie Mac's a smaller version of Fannie Mae. That is the back end of where loans get delivered as a mortgage-backed security after closing.
So basically, is Fannie Mae and Freddie Mac, are they governmental agencies?
No, they are not a government agency. HUD is a government agency, but Freddie and Fannie are not. Okay,
so what are they then?
Private. Well, they're private.
Yeah. So they're a private agency, and because they do so many loans, they have a lower cost, but it has to fit into a certain criteria because they bundle those up and then they put them into mortgage-backed securities, which goes regurgitated back into the stock market, basically.
Pretty much. Pretty much.
So that's how they're able to keep rates and costs a little bit lower. So once they don't fit into that criteria, then you have to go into a different sort of private sector. Right.
Right. And a different investor source, a different money back source for those non-QM loans. Correct.
And so because they're not, as frequent as others, as like the loans that fit nicely into a mold, and there might be some issues with the HOA or their repairs they're making or their cash on hand. So then you go to these other lenders and the cost is a little bit higher.
Correct. They require typically a higher down payment, and the cost for the loan is higher and the rate is higher. And that's the way you do the non-warrantable condo types of loans. So But let's look at what makes a condo non-warrantable, right? So when you look at condominiums within the guidelines, what typically happens every time with every association, every condominium neighborhood, there's a builder warranty, a 10-year builder warranty. And within that 10-year, what that means is that the builder is going to warranty anything that goes wrong with the buildings. So every time, without exception, right before that 10-year window is up, law firm comes in, works with the association, comes up with all these what they call construction defects. And so they start itemizing all these little small defects around the association, and then the HOA sues the builder to correct those defects. Okay, so what that is now you have a construction defect litigation. When you have that type of litigation, when you have active litigation, that makes it a non-warrantable condo. Let me back up 1 minute. If the litigation is typically health and safety related, and building, typically around the buildings, for example, leaking windows, faulty balconies, faulty stairways, things like that, that goes into the construction defect litigation. If it's just community stuff, not affecting the homeowners, that can typically fly under that radar. But mostly it's construction defect litigation is going to make that project non-warrantable every time, most every time. And so, but there's been some recent changes though to that with Freddie and Fannie. If you look at the history again, it's all about the history, right? When you look at, if you recall, was it a couple of years ago, that big building in Florida, that big condo, high-rise condo that collapsed?
Yep.
That's what created a whole new set of guidelines. Now I will tell you though, that these guidelines, I think, are really unfair industry-wide, because Fannie Mae put a blanket stamp on certain type of condominium, which doesn't apply to anywhere that we live here in Southern California, really anywhere in California. We don't do high-rise types of buildings typically here. So, but they applied it nonetheless. So the one thing they've added was that it used to be if your defect litigation was settled. In other words, they've been to court, they have an agreement, they've settled the litigation, you're good to go. Fannie Mae has also now added another requirement that even though the litigation is settled, the defects must be corrected prior to becoming a warrantable condo.
Yep.
And that's where we're seeing people. Yeah, so that's where we're getting tripped up right now. Is yes, the litigation is settled. They got the big fat check to make the repairs, but Fannie Mae is now saying, well, now we want proof those repairs are completed.
Yeah.
And that's kind of, in my mind, the bigger issue. I think it's really unfair. Because typically defects and I've read the litigation in most of these complexes, by the way. I read all the litigation when these come across my desk, and all the defects are minor stuff, like, cracked window frames or whatever.
Usually, yeah.
Small stuff.
Sure.
It's not gonna make the building come crumbling down. But nonetheless, Fannie Mae has that requirement now.
Yeah, I think when that happened in Florida, that just really was very scary. And so
yeah, for sure,
when it comes to lives, I think that's probably what happened. They just thought no bother with this. So what I've noticed is that the condos and I've only run into condos that like stackable, one on top of the other kind of units, that when they're in this state of non-warrantable, that the prices are a lot lower than if it was a free market. That's because the cost of buying is going to be higher, right? And so I see a unique opportunity if someone's willing to take the risk with, how long until it gets corrected and all this kind of stuff, so that they're warrantable again. And also just staying, involved with the HOA, that you could potentially get a pretty good deal on a condo. And then when it's resolved and there's all the financing available, then you could sell at market rate. So, with risk comes reward, but you definitely have to pay attention to that one.
Yeah, I mean, there's certainly, I think, an opportunity. You're right. There's an opportunity down the road, because that eventually that will be settled. The work could be done.
Right.
Now it's become a warrantable condo. And typically, even on a non-QM loan, because there's a higher mortgage rate, you're gonna refinance to a lower rate at some point down the road. Then when that litigation is settled and the work is completed, your home's worth more money.
Yeah,
For sure.
yeah. So there's things to think about there. I know we
Mhm.
have a couple of them in Anaheim that as soon as they turn 10 years old, yeah, we had those
Oh yeah,
sort of
every
builder
time.
claims. And then I have a
Yeah, oh, yeah.
complex right now in Santa Ana that's definitely older than 10 years, but the HOA has kept their price down so low that they neglected some maintenance things. So now they're in the
Yeah, that'll
no.
do it too.
Yep,
Yeah.
they're in the no zone. But anyway, well, good. Well, this is a great explanation because I know that probably 95% of the mortgage and real estate industry don't know anything about it. So
Typically, that's the case, unfortunately, yeah.
you don't know what you don't know, right?
Sometimes,
Yep. Yep.
for sure.
All right, Rick, I appreciate you and we will see you next week.
Awesome. Thanks, Megan. See you next week.
Thank
Take care.
you.